Oh, welcome back. I'm coming to you live this morning from the Milken Institute Global Conference here in L.A. Business leaders from all over the world are meeting to discuss a whole host of issues, including the economy, as well as ESG investing, as well as philanthropy, back to work, travel post-COVID. But, of course, the big issue is whether or not the Federal Reserve is going to be able to have a soft landing, raise interest rates, but not trigger a recession. Here's the U.S. Chamber of Commerce's president and CEO, Suzanne Clark, on the economy and the broad story. Let me start with 30,000 feet question. What do you think at the Chamber is most important right now to get back to growth? We just saw a contraction in the economy. What are businesses most talking about right now?
Look, I appreciate the question because it's all I do all day is talk to CEOs of small companies and big companies, every sector, every geography. And what they're talking about the most right now is the worker shortage. They believe it's a driver of inflation. It's a driver and contributor to the supply chain disruptions that we're having, and they're eager to get it solved. Next up is, of course, inflation, energy prices, and a lack of a trade agenda.
How did this happen? Why are we having such a worker shortage? Because I think this has so many elements to it. You've got a shortage of truck drivers. You've got high-paying, white-collar jobs where you're seeing wages go up and up and up. Where did this start, and how are we going to fix this?
So we had a worker shortage before the pandemic, and the pandemic didn't make it any better, right? We have 2.6 million people left the workforce since February of 20, which is a remarkable number. What are the causes? I think part of it was early retirements. We saw a slew of them, particularly when government was paying people to stay home. We have 1.5 million women, fewer women in the workforce because of a lack of daycare. We had 1 million legal college-educated immigrants who didn't come. They didn't come to the United States in the pandemic. And so there are a lot of factors that contribute to the problem. Now the question you ask, which is how do you solve it, right? Part of it is we're going to have to double the number of legal immigrants into this country. We can secure our border and do that, right? We're going to have to fix the daycare situation. 16,000 fewer daycare providers than before the pandemic, and we're going to have to get more people into the workforce.
What is your sense of inflation? Do you see any let up on the horizon?
The question is, will government policy help or will it hinder? So what are the things that could help reduce inflationary pressure? Well, a reduction in energy prices, which would make us, allow more domestic energy production, get rid of the permitting morass that we're all in. Another thing that would help inflation is to open up global markets, reduce tariffs. I read a CBO study that said the tariffs of 18 and 19 in 2020 alone cost American families an average of $1,200 a family. So open up more markets, reduce tariffs, increase domestic energy supply, and fix the worker shortage.
What's your take in terms of recessionary talk right now? You've got a war on Ukraine. You've got uncertainty, certainly, in the European economy, and this debate now about the U.S. economy after that 1.4% contraction in the U.S. economy. Do you think we'll see a recession this year?
A lot of the people here are talking about maybe it's next year, maybe it's slower. And so instead of being a prognosticator and trying to figure it out, at the Chamber, we're doing everything we can to keep it from happening.
And what's the impact, do you think, of higher rates coming? And the Federal Reserve expected to announce tomorrow on Wednesday that it's raising rates by half a point. Do you think that has an immediate ripple effect in terms of the impact on business?
Look, I think the risk of inaction is worse than them trying something. And so they've got to start to try to fight inflation. And it'll be difficult for them to do it at the right pace, and we're all watching and hoping that they get it right. In the meantime, we cannot make it worse with that fiscal policy. We need to reduce government spending. We need to make sure that if that Build Back Better comes back, that we kill it. There are things that we can do that are under our control that can help beat it back.
I mean, all of this spending, inflation was at a 1.4% rate when, President Biden started his term. We're all the way up now, close to 10% in terms of consumer inflation, 8.5%, expected to get worse because we haven't even entered the peak driving season in terms of energy yet.
Everything that's been contributing to a bad economy, and some things, the war, the pandemic, are out of the administration's control, but other things aren't. And so an expansion of government spending it's exactly the wrong time. Raising taxes, exactly the wrong time. This administration wants to blame business and say they're just greedy and raising prices. And of course, they have good economists in the administration. They know that that's that's not true, and they need to focus on the things that they can do to help the American consumer right now.
Where do you think the growth is in either the country or the world? I mean, for years I've spent my time looking at where the growth is in terms of globalization. But today it's much more inward looking. A lot of companies thinking the U.S. is the place to be. Do you see sectors that are going to perform, higher than others in terms of growth? And what about the global story in terms of the growth?
It's such a good question, and I think it's so interesting to think about what does the supply chain disruption do to change the patterns of where companies are investing. What happens with nearshoring? What is ally shoring? How do people decide where they're going to be based? And I think one of them they're looking at is, will American government policy allow investment here? Will we let mining go after the critical rare earth minerals that could allow the tech sector to just continue to boom here, right? There are always going to be things made overseas where labor costs are lower, but there's a lot we could do here in the United States.
Are you hearing that the semiconductor log jam, the fact that we're relying on these things out of Asia, is still an issue, and do you see that alleviating anytime soon?
It's 100% still an issue. I was with a CEO this week that said we are moving people from sales to purchasing. They've made purchasing sexy again, going around trying to find chips, trying to find key component parts. It's part of why you're seeing inventory levels so high. So I think it is still a problem, but maybe as a silver lining, we're going to start to figure out how to source these things closer to home.